All right. You guys are welcome. If you can hear me, just drop one in the comment section. Yeah, if you can hear me. I'm trying to call other people to join. All right. If you can hear me, all right. If you can hear me, welcome to our talk show. So if you can hear me, just drop one in the comment section. All right. Thank you, Len with Shahid. I'm trying to add other people. So yeah, J Joseph, welcome. Yeah, welcome. Thank you so much. Yeah, thank you, Joseph. Yeah, welcome. So I'm trying to add other people to the. Trying to call other people to join. So I think we can just wait a little bit before we start. So trying to call other people to join. I'm coming. All right. Everybody is welcome. We welcome everyone. I welcome everyone. Yeah, if you can just hear me, just drop one. Just drop something in the comment section so I can know everybody is hearing me, so we can start. So we can start the whole stuff. We have 5 people here now. All right. If you can hear me, drop something in the comment section. All right. All right. So I welcome everybody. I welcome everybody to the talk show. Our topic for today, that's the episode 3. Our topic for today says the dynamics of perceptions. The dynamics of perceptions. So today we'll be doing a lot of things, but I will make it very, very fast because we'll be looking at a lot of things. One of the one of the things or one of the topic which a trader should be talking about should be of the part of the perceptions. So we go deep into what the dynamics of perceptions as a trader, and we're also looking at the charts, also looking at gold, a practical example. Yeah, and it's not even something of maybe last month or it's just something of this week. We'll be looking at a practical example of what happened this week and how I was able to um, narrow my mind or thinking. All right. Okay, Ijoma, thank you, ma. You are welcome. All right. So if you are just joining us on this live stream, just drop something in the comment section so that I can acknowledge you and welcome you. All right. So let's go into today's lessons. Okay, I'll be making use of. Let me. So I have to make use of show myself. All right. I hope everybody can see me. I hope everyone can see me. I'm trying to. All right. So our topic for today is the dynamics of perceptions. All right. So we'll be looking at first what is perceptions. If you ask questions of okay, let's go into what is perceptions. So perceptions is the way we interpret and give meaning to what you see, experience, or observe. Perceptions is the way, or perception is the meaning we give to the things we see. There's a common understanding that we don't see with our eyes, we see through our eyes. So our eyes is just like a lens that is able to see, but the meaning of the things we see is being given from our mind. Like our eyes is just, that's why you can see that someone that is blind can still perceive. He can still touch at things and still name the thing. So when we talk about perception, perception is not really talking about the things we see. It's talking about the meaning we give to the things we see, right? So let me just try to put something up. So I said there, perception is the way you interpret and give meaning to what you see, experience, or observe. I hope everybody can hear me. I'm just too conscious about people hearing me because I don't want to talk and people don't hear me, right? So perception, when we talk about perception, is the way we interpret and give meaning to what we see or experience or observe. So which means that we see through our eyes, we don't see with our eyes. So I can look at something. Okay, someone in the comments. Yeah, I love this. I love this. Perception is like I'm bearish and you are bullish on the same chart. Yeah, so we see, so which means that the meaning we are giving to the chart. Okay, let me use, for example, as a forex trader, you open the charts, right? Let me just make use of the charts now. Let me try to share screen. I'm coming. I want to share my screen. All right. So I'm sharing my screen now. So let me just pull to the chart here. So let me just put to a chart. When we open the chart, I want to use a chart that is too clean, that doesn't have anything. All right, let me just I want to make use of a chart that is so clean. All right, so let me make use of this chart. So one thing about perception is that when we open the chart as a trader, everything we see on the chart, it is neutral. The market is neutral. Market is not telling us anything about itself. It's just what? It's just providing us information. Everything on the chart is neutral, right? Now, I want you to think back when you started trading. Think back to when you started trading, when you did not know anything about the chart. So when you did not know anything about the chart, when you open the chart back then, you will not see anything. You will only be seeing candle, you only be seeing numbers and everything. You are not giving meaning to what you are seeing. Does that mean you are not seeing? You are seeing, but you are not giving meaning. So perceptions is giving meaning to what you are seeing. So now you can see that the dynamics of perceptions is a very, very important thing to a trader. So which means that we all give meaning to what the market is doing, and that is not exactly what the market is doing, right? So which means as a trader, we are only trading our meaning in the forex market. We are only trading what? Our meaning. So I say perception is the way we interpret and give meaning to what we see. So when you look at the chart, a very pure chart, nothing on the chart, you just started as a forex trader, nothing on the chart, you have no understanding of what the chart is actually saying. But the moment you begin to learn and you open the chart again, you begin to see. What then are you seeing? What is the difference between when you first started and when you learn something about the market and you open the same chart again and you begin to see fair value gap, you begin to see other blocks, you begin to see so many things on the chart. What happens? It's because you learn something, and that something what develop an understanding in you. Then when you see it again, you begin to what give meaning to what you are saying. You begin to give meaning. So now perception is not exactly what that thing is, right? Perception is not necessarily what is happening. It is how you see, and it is how you see it and you interpret what is happening. That is perceptions. So let's start from the basics. That is what perception is all about. So perception is not necessarily what is happening. It is how you see and interpret what is happening in the market. So you see how important the dynamics of perception is to us as a trader. So everything we are looking on in the chart, the market does not care. It's only what providing us with information. Then we are the one what giving meaning to the information the market is providing. Now, the reason for this live show, or the reason why we started the series of the Trader's Edge, is to put some things in place. Yeah, I know most of us started forex trading with a wrong mindset. We started forex trading with a wrong belief, right? So when we talk about the perception, we already have what an installed wrong belief of the market in mind already, and that is what is hurting us, right? So when we talk about the perception of the dynamics of perception, we want to correct the understanding we have of the market, the belief we have of the market, and return it back to what it should be, right? And that is what today's lesson is all about. So when we talk about perception, perception is not necessarily what is happening, it is how you see and interpret what is happening. Right? Two traders can look at the same gold charts or the same USD Japan charts and interpret it differently. Right? They can interpret it differently. The same chart, nothing is happening. Interpreting it differently. What happens? What happens is not that the market or the chart is giving them different information. What happens is that everybody interprets it based on what is being installed in their mind. Because our mind has a way of what? Recognition, association, connecting, right? Okay, and one important thing you have to know is that you cannot perceive what you have not learned. Yeah, this is very, very important. This is very, very, very important. You cannot perceive what you have not learned. So, which means that for perception to occur, there must be a what? A learning. There must be a learning. So, which means that at first, when you open the USD Japan, the USD Japan chart, when you first started as a forex trader, you open the USD Japan chart, nothing is happening on the chart. You are not seeing anything. You don't know anything. You just started, right? Nothing. You are not seeing anything. But the moment you begin to have understanding of the market, you begin to see something. For example, now let me go back to that chart. What can I see? I can see a lot of things. I can see a fair value gap here. I can see a fair value gap here. I can see another block here. I can see another block here. You can see just on that same chart, and I begin to see a lot of things, right? Now, this is the error that may come in. Something we call the perception error. The perception error is when you have a wrong belief. Okay, for example, now for you to perceive, your perceptions comes from what? First from your belief, from your experience, right? Your belief, your experience, which means that you must experience something, you must learn that thing. For you to know that this thing, for you to be able to perceive, you must first what? Encounter that thing, right? So all right. So before we go deep into today's lesson, I hope everybody can hear me. If you can hear me, drop one in the comment section. Just drop one in the comment section. You can hear me. Before we go deep, there is something we have not done yet. Before we go deep, drop one in the comment section. If you can hear me now, drop one in the comment section. I hope everybody can hear me. If you can hear me now, drop one in the comment section. Drop one in the comment section. If you can hear me now. All right. If you can hear me now, drop one in the comment section. I hope everybody can hear me. Let me call people to join us. If you can hear me, just drop one in the comment section. Drop one. Just drop one in the comment section. If you can hear me, drop one. All right. Heavenly Father, we say thank you. Thank you for today's meeting. Oh Lord, as we start in the name of God the Father, the Son, and the Holy Spirit. Oh Lord, give unto us wisdom, knowledge, and understanding. That as we begin today's teaching or today learning, because we want to learn together, that Lord, you give unto us wisdom. Wisdom in the name of Jesus. Say there's a spirit in man that the breath of the Almighty gives him understanding. That Lord, we pray for wisdom in the mighty name of Jesus. In Jesus' name we are praying. Amen. All right. Thank you so much, Joseph J. Joseph. Right. Thank you so much. All right. Let's continue. Let's start now. Now I talked about what perception is all about, right? How that perception, it is not necessarily about what is happening. It is about the meaning we give to what is happening. So perception needs to do with what you giving a meaning to something. So which means that it is not the meaning you give to it might be wrong and might also be right. So the meaning you are giving to what you are saying does not mean that that is what you are saying. Like, does not mean that that thing you are saying is what you are saying. Oh, I pray the Lord give us understanding. All right, so we talked about perceptions. Now we move forward to talk about how that you cannot perceive what you have not learned. So which means that learning, then which means you need to learn to perceive, then you make decisions. So your perception is, after your perception, then you make decisions. Right? You can see how necessary it is for a right perceptions. All right, so there's one thing I want to talk about before we move forward. It's talking about the perception error. The perception error is when a trader started on a very, very wrong mindset. Perception error is when a trader started on a very wrong mindset. On a very, very wrong mindset. For example, some traders started as the trading, the forex market is an income generating market. Oh, some people started with a mindset of, the forex market is where you can make a lot of money, just place a buy, just place sell, just place buy. They started with a wrong mindset of the market. So people have the mentality of, the forex market is a place where you just analyze your charts and market must obey what you are saying. That is what we call the perception error. Now, one thing about perception error is that it is not really about what the market is. It is not about you are seeing wrongly. It is about the meaning you are giving to the market. Now, if you want to change our perceptions, then we need to go back to the meaning we give to the market. So you can see that the perception is not about what you are saying. For example, now, I said this USD Japan trade now. I saw when I saw this trade, I saw the what's it called? I saw this other block. I saw this other block here, and that is where market buys from. And someone can enter the chart here and can see this fair value gap, and that is where market sell from. Right now, the understanding about everything I'm talking about here is that the way we perceive the market, it is beyond the charts. Our perception of the market is beyond the charts. It is beyond the chart. It is our understanding. It is a mind game. Our mind game. For example, now you can have an experience whereby you lose your money. Maybe for example, now market is already in profit. The market was going according to what you wanted. The market turned and hit your stop loss. That is an experience. That experience has been registered in your mind. So when you open your chart again to take another trade, there is high probability that even that the experience you once had we come up again in your heart, because your mind has a way of connecting situations. And your mind, the techniques of your mind is that they want to protect you. So that is why you enter some trades and you're like, oh, you're already in a profit, and you're like, oh, market is going to return back. Oh, market is going to return back. You are scared. The reason why you are scared is not because market is giving you a fearful information. It is because you assign a meaning to what is happening in the market at that instant, and that is why you are fearful, right? So we can see that our perception now, if you look at the same chart, someone else can look at the same chart and be like, oh, this is an opportunity, I can make a lot of money there, right? So what we want to learn today is how we can be able to have what an um, perspective, objective perspective, a perspective or a mindset that is able to learn, a mindset that is able to learn, that we see everything from an objective angle, right? So we have two types of perspective for my own way. We have the subjective and we have the objective. You know, the subjective, that is what it talks about, what the perception error. So that's what it talks about, the perception error. So, but when it talks about the subjective, is when you want market to do, or like you want market to do the meaning that you give to the market. Like for example, now some people have a very terrible understanding of the market. They just feel like, oh, market must do what I want, market must go according to another block. Oh, maybe I saw this, maybe now you can see there's a perception error here. If I'm not being careful, is that when I saw this other block here, I should not be like, oh, market must buy from other block. I only saw this fair value gap because of what? Because of I know the fair value gap. I have learned fair value gap before. That is why I was able to see this fair value gap, right? Now let's assume for an instant that I did not know, I did not learn the fair value gap, right? So when I saw this other block, I will be like, oh, market should buy from the other block. Market should buy from the other block. Now, a subjective perspective is when I begin to what? Tell market what to do. Because of what? Because I gave a meaning to the market. That is a what? A perception error. It's a perception error, and it's from what? It's from our belief of what the market is all about. So, but as a trader, we need to have we need to have an objective, perceptions of the market, right? An objective perception of the market. The way we can have objective perception of the market is when I put my entry here and I put my stop loss, and I was like, whatever market wants to do, market should do. But based on my understanding of the market, I gave a meaning to the market. The meaning I'm giving to the market, don't forget our definition of perception. The meaning I give to the market is not necessarily is what market is doing. I only give the meaning based on what I know, my belief about the market, right? My beliefs of the market and my perception, what I'm able to see based on the definition or the associations in my mind, right? I hope everybody can hear me. If you can hear me so far, just drop something in the comment section so I can know everybody's hearing me. All right. So today we will not be going deep into the perception error, because perception error is actually something we do that is very wrong. The understanding, the mindset, the mentality we have about the market, that is very, very, very wrong. And now, you see what I said? He said, you cannot perceive what you have not learned. So, which means that the understanding you have about the market, it is because of what? Your past experience. It is because of what someone taught you, or it's because of social media taught you. You see it somewhere, you see it goes through your five sense organs. You saw it somewhere, and that is what makes your belief. And that is why you are seeing market that way. If I open the chart, for example now, okay, let's say for example now, I open this chart now. What can I see? What am I seeing? What is my definition of what the market is doing? I can see a lot of things. Someone else who can open the chart and see something very, very, very different. So which means that everyone trade the market according to what they know, according to what they perceive the market is doing. But now this is the balancing. The balancing is that there is something called an objective perspective or an objective perception. An objective perception is what we want to focus on today. But everything I've been saying so far is just an introduction to let you know the error or to let you know how big it is for perception to occur. I told you something. I said perception of the market is not about the charts. It is a thing of the mind. For example, now you may be following someone's signal, or you may be trading with someone, or maybe this person is dropping chart for you, but you may not be making money. You may not even be making as much money. The reason is because it's not about the setup. It is about you yourself. There is a mindset you have of what the market is all about. There is a mindset you have of what trading is all about. And the mindset, the mentality, everything, your belief about the market is not the right. It may not be the right, but that is what you are perceiving the market to be. If you ask yourself a question, what is forex trading? Just ask yourself a question, what is forex trading? What belief did I have in the market? What is the belief I have in the market? What did I perceive the market to be? Every of your perception comes from something you have learned in the past, or come from an understanding you once have, come from an experience you once have. It may be a negative experience. Some people are so fearful, they are so scared that if they win, they have consecutive winnings in the market, they are so scared. They know that, oh, the third or the fourth trade is going to what? Eat stop loss, and they are going to bleed their account. They know because it has happened before. But because it happened before does not mean that it can repeat itself. That is why I started with something. The market is neutral. Every information, every pain, every anxiety, every confidence, everything you have of the market, that is not what the market is doing. Every other blocks, every fair value gap, that is not what the market is doing. It is because you perceive, you give it a meaning. Perception gives it a meaning. What you are saying, you give it a meaning. And that meaning is what you are now living with. Right? So we'll be looking at the objective perspective, what it means to have an objective perspective. And now, if you have an objective perspective, so you can check yourself and see if you are truly having the right perspective, if you are truly having the right perceptions of the market, right? Thank you. All right. So let's go deep into today's lesson. So now that we talked about the objective perception in trading, so objective perception in trading, I'm coming. So objective perception in the trading means seeing and interpreting the market as it is, rather than as you want, fear, or expect it to be. So you are interpreting the market, you are analyzing the market as it is, without putting anything, without letting a past experience to give you a definition of what the market is doing. All right. So if you understand everything to this place, like to this particular place we are now, yeah, I just want you to drop one in the comment section, and I want you to drop what you have learned so far. Yeah, because I just want an interactive one. So I will bring your comments up so that you can see, other people can see your comments. So what you have learned so far, like we have used 30 minutes now. What you have learned so far, just drop it in the comment section. I will bring your comment up. People can see it. All right, so I'm waiting for you guys. I'm waiting. Okay. So now that we talked about the perceptions, we talked about the perception error. We talked about two types of perception we want to look at: the subjective and the what, and the objective. So I will not be talking about this. You can easily check yourself and see if you are having the right mindset of what the forex trading is all about. So a recap from the beginning. I says perceptions is the meaning we have given to what we see. So we are not seeing with our eyes, but we are seeing through our eyes. Our eyes is just giving an information to our mind, but our mind is what is giving the definition of what we are seeing, right? So that's why two people can see something and they will have different definition to what they are seeing. It is not because the thing they are seeing has two faces or have different faces. It is because of their perception, it's because of their mindset, it's because of the way they think, or it's because of the past experiences they have had about that thing. Right? So, as a forex trader, one thing we have to be so careful of is that we should not let our past experience about the trading, our emotional fears, a wrong belief to distort us from seeing the clear flow of the market. Right? So I'm still waiting for you guys' comments. I'm still waiting for you guys' comments, right? So we're looking at the objective now. So, and one thing I want to say here is that, you know, as a human being, we are, right? We have an identity, we have a belief. So, from our belief, we have a personality. From our personality, we have an habit. From our habit, we have a behavior, right? So let me take away the identity, because the identity is just like who you are. It's like a foundational stages, right? Now let us talk about the belief. Let's talk about the belief. You know, the belief you have of the market is what is shaping your perceptions of the market. What do you believe the market to be? And that is what we want to look at today. Your beliefs. You want to check it. Check what you believe the market to be. So your beliefs, your personality, then your habits. So your belief, let me say your personality, your perceptions, your habits. Your habit comes from your perception. What do you see the market to be? Now, if you see what the market will be, then that is you check all your habits in the forex market, like closing a trade early, um, entering, over trading, over exposing your capital just because you want to make more money. You know, all these habits you are having in the forex market comes from what? From your perception. And from your perception, it comes from your belief. Everything comes from belief, perceptions, your habit. So your habit you are having is not about, is not, if you want to correct your habit, it's not about you trying to, oh, let me just check things off. No, no, no. You go back to your belief. What do you believe? Because your habit comes from your belief, right? So for example now, I can enter the trade now and be like, oh, market is already moving. Market is already okay. Example, let me use this trade as an example now. Let's say, for example, I saw the market here. All right. Okay, let's say for example now, I saw the market here. You know, I know that okay, market is going to buy from this other block, but when I entered the chart, I saw the market here at this particular level here. So I was like, oh, market is already going. Let me fast and buy. Let me fast and buy. I put my entry here. I put my entry here. Then let me just fast and buy. The habit I am doing right now of hesitating or just entering the trade because, oh, market has already come to where I want to buy, let me just enter the trade, is what we called you not having patience, right? You just enter the trade because of you have a belief that, oh, if you miss a trade, market is not going to come back to the entry, or market is not going to give you another entry. Market will just be going, and that is the reason why you will do this thing. That is the reason why you put an entry here, and when market opens on Monday, market will retrace a little bit back, take you out, then buy. Something like this now is going to give you what? A bad experience. It's going to let you to be so angry. It will create another experience within you. But now this experience is what? Is bad. What causes the habit? What causes you to just enter the trade, even though market has entered your what's it called, your POI? What makes you to enter the trade without checking your setup, without checking your edge, without checking your own written plan? It's because you have the belief that if market has entered your POI, market will be going without giving you another chance. This kind of belief can limit your trading ability. I'm just talking about a belief system that can limit you. So when we are talking about perception, I've talked about many things. So you can see that objective perceptions means seeing and interpreting the market as it is, rather than as you want or as fear or expect it to be. So you are interpreting the market as it is. You are flowing with what the market is doing. For example, now, if you have a bias, maybe for example now you look at the chart, or maybe wait, let me see something here. I think I have. Wait, let me see. All right. Okay, I think I have this good trade here. Okay, for example now, there's something I did here. I was first expecting markets to sell here. Can you see my chart? Can you see my chart? If you see my chart, drop one in the comment section. So I was first expecting markets to sell here, but um, having an objective perception of the market is when you allow market to do what you want to do without you forcing market to do what you want to do. All right, so let's go to the objective perspective. Now, your objective perceptions mean seeing and interpreting the market as it is, rather than as you want or as you expect it to be. Right? So, what does it mean? Or what are the characteristics of objective perspective? So, those are the things we'll be checking out, and when we check those things, then we'll be looking at the chart, analyzing the chart, and looking at the weekend trade, the cap, looking at the trade we took during the week. What is the analysis behind it? What are the trade behind it? All right. So the first characteristics of objective perception is what I call acceptance. Is a trader superpower. Acceptance. What does it mean to accept? So acceptance is a trader superpower, which means that the characteristics of having objective perspective or perception is accepting. You just accept that, okay, market can do everything you want to do. So one of the also these things here, you must accept that any trade can lose. You cannot control the market. You cannot know the next price movement with certainty, right? You will sometimes miss opportunity. You will sometimes make mistakes. So once you genuinely accept this reality, you stop fighting the market. So acceptance is accepting the nature of the market. So that's the first characteristics of objective perception. Right? The first characteristic is what? Acceptance is a trader superpower. Accepting what the market is. This is what the market is. Accept. You need to understand the market perceptions. Okay, this is what the market is. Don't try to bring anything else. You just accept. Oh, this is what the market is doing. Accept. The market has the final say. Accept. You are not struggling with the market. Right? That's the first characteristics of the subjective perception. So once you genuinely accept this reality, you will stop fighting the market. You stop trying to force outcomes. You become more objective. And when you become objective, your executions improves. So once you become objective about the market, your execution will improve because you are no longer trying to control the market. That time that you analyze the charts, and you put your entry, and you found yourself praying, you found yourself begging the market to, oh, please go my way, please go my way. That shows that you are doing something wrong. That shows that you did not accept that the market has the final say. That shows that you did not accept that the market can do anything he want to do. Accept everything the market is doing. Just accept. Okay, market can do anything you want to do. Accept. So this is the first characteristics of what? Objective perception. So our second characteristic is what? Is you think in probabilities and not certainties. So you think in probabilities and not certainties. You are not trying to, oh, market must do these things, or some people will be like, um, when I open a chart, I see my trade, I take my trade, market must do what I want to do. All those things, all those beliefs, all those mindset, it will give you a wrong perceptions of market. That is not an objective. That's why we are looking at the objective perception. What does it mean? What are the characteristics? What are the things? What does it mean to have what? An objective perception of the market. The first one is what? You acceptance. The second one is what? Think in probabilities and not certainty. Nothing is certain in the forex market. But above all, I think we talked about that last week. You need to know that the forex market is a business. People be like, oh, forex trading is gambling. Okay, let me just try to talk about that before I continue. Forex trading is not gambling, because forex trading is a business. It is a business, and people can be like, okay, what are the things that comprise the skill and the finances and the time? Those three things comes together are needed in the forex market. The skill, you must know, you must have the knowledge, you must have time, and you must have finances. So the another thing that differentiates forex trading from gambling. But does that mean that people cannot gamble in forex market? Yes, they can gamble. You see some people just take trades. Anytime you take trades without a written plan, without your edge, without your setup, without your strategy, without your plan, you are gambling. Because one thing that differentiates forex trading as a business from forex trading as a gambler is that one of them, the forex trading have a plan, have a trading plan, just as we have a business plan. No business out there does not have a plan. They have a business plan, they have a business, they write up everything. So as a forex trader, what makes it a business is that you have a plan, you have an edge, you have your strategy, you have something you are looking up to, because you know that the forex market is an endless opportunity. There is a lot of opportunity in the forex market. So without a plan, you will be a gambler. If you don't have a plan, if you don't have a strategy, you will be a gambler. So even if you don't have a strategy, you will take a buy today without no reason. Oh, you just open the chart, you see fair value gap, you take a buy, you make some money, you see fair value gap, you see other blow. You're just trading without a plan. You cannot even know your own win rate. You cannot even come, okay, at the end of the year, how many trades do you take? What are your win rates? What is your edge? You can't know all those things, and all those things is very, very important for a business. So forex trading is a business. It is not a gambling. It's not gambling, and some people can gamble in it. Yes, it is very possible. Some people can gamble. They will just enter the trade because they know that it is a game of probability, and also gambling also is a game of probability, right? So they will just enter the trade without anything. You'll be like, oh, let me just buy here, let me just sell here, let me just buy here, let me just sell here. Right? That is not what forex trading is all about. So in forex trading, for the seconds where we can think, we can have a objective perception is to what think in probabilities, not certainty. So professional trader understand that anything can happen. There is no certainty in an individual trade. So any trade you want to take, even if you follow your setup, you follow your edge, you follow your strategy, there is no certainty. Nothing is certain in the forex market. Nothing is certain, right? So you need to have this mentality, this understanding. I know that some of us, when we started forex trading, you saw those big forex traders that are living large, um, that are buying a lot of things. Oh, you were like, oh, that is what forex trading is all about. Yes, you can do that with forex trading. You can buy all those things, but with the right mentality. It's a business with the right mentality. It takes time. It takes time, and it takes what intentionality. You need to be so focused. And so as a forex trader, professional trader understand that anything can happen. They accept it. There is no certainty in an individual trade. Your job is not to predict exactly what will happen next. Your job is not to predict exactly what will happen next. Your job is to identify situation where your edge has historically produce favorable results and execute them consistently. So hear me out very well. Your job as a forex trader is not to predict exactly what will happen next, right? Your job is not to predict exactly what will happen next, but your job is to what identify situations where your edge has historically produced favorable results. So which means that your job is to what? To execute your edge. You just look at the chart and be like, oh, where is my edge? Where is my trading plan? I'm only trading according to my trading plan. Nothing else. I'm not seeing anything else. That is the right perspective. That is the right perception of the market. That you have an objective perception of the market. You think in probabilities, not certainty. Oh, what is the probability that this market is going to go my way? It can never be 100. It can never be what? It can never be 1. The probability can never be 1. It can never be 1. If the probability is 1, then you are in a gambling phases. It can never be 1. So the probability that the market is going to go, for example, now this particular go sell here. Yeah, I'm not looking at this go sell here. I'm not looking at it. This is my chart. All right. This particular go sell here. I saw my trading plan, and everything go according to my trading edge and everything. What is the probability that market is going to sell here? What is the probability the market is going to sell here? It can never be 1. It can never be 1 because what? Market can do anything it wanted. What is the probability that you are going to leave tomorrow? It can never be 1. It can never be 1. Because anything can happen. Anything you are not in control, what is a probability? You are not in control, like you are not in control of the end products. So in forex market, we need to have this understanding and this mentality that we do not know the end product. Nobody knows the end product. Not even the big forex traders. They do not know the end product. They trade based on probability. There is no certainty. I'm not sure market is going to. Market can open on Monday and just open with a gap and take me out. Market can open with a gap and that is all. Market can open with a gap and just took me out. Now, because I have the perceptions, I have the understanding that everything I am doing in the market is on probability. It is not certainty. I will not what? I will not take this lose to heart. I will only accept this lose as what? As a data. Data, okay, I will study this. What happens? What did I do wrong? Then when I study it and I see that according to my training plan, I did not do anything wrong, I accept it. That is market. Don't forget the characteristics of having objective perception. Number one is acceptance. Number two is what? Think in probability. That is the way you can have what? An objective perceptions of the market. Right, let's go to the third one. So the third one is what? Follow your trading rules without emotional interference. This is one is very, very clear. All right, I can see some comment section now. All right, perception is like I'm bearish and you are bullish on the same chart. All right, trading is not gambling. Yeah, trading is not gambling. Learn with Shahid. Thank you. Trading is not gambling. Ijoma, the neutrality of the market. Right. Every outcome is based on perception. Yep. The perception of losses made held me back for a long time. All right. So you can see these things are the real talk. Forget about the strategy. Forget about that. Forget about that. It's very important, but forget about that for a minute. The perception. What do you see the market to be? Can you even accept losses? So let's go to the fourth one, to the third one. The third one says, follow your trading rules without emotional interference. This one is very clear. Follow your trading rules, which means that, don't forget, it takes us back to what we started with. You cannot perceive anything you have not learned. So which means that you will learn it. You will learn it. After you learning it, then you focus on it. So you follow your trading rules without emotional interference. So which means no matter what happens in the market, don't let anything to get to your what? To your emotions. Don't let anything to take you out of the market. Don't let anything to control you. Follow your trading rules. That is why you have to what? Back test it. That is why you have to back test it. You must have a what? A proven data. A proven positive expectancies data that okay, my strategy works. Okay, let me, for example, if I take 10 trades, I can win 7 and lose 3. So when you lose 3, you will know that okay, it's fine. At least I have 7 to go, I can win 7. My trading works, I have 70% expectancies. You know, all this kind of mentality, it will allow you to give you the energy to follow your trading rules without emotional interference. All right, so we go to the fourth one. The fourth one says accept losses without taking them personal. So accept losses without taking them personal. Accept losses without taking them personal. So which means that when you accept losses, so everything still comes from the word acceptance. Acceptance. And one of the ways you can accept losses without taking it personal. All right. Okay. Okay. You are welcome. I can see you, right? You're welcome. All right. So one of the ways you can accept losses without taking them personal is what? Separate the trade from the outcome. Separate the trades from the outcome. So imagine you have a setup that meets 100% of your trading rules. You enter it, you manage your risk properly, correctly, price hits your stop loss. Was it a bad trade? Was that a bad trade? Not necessarily. It's not necessarily that it's a bad trade. It was a losing trade. When you backtested your strategy, does it give you 100% winning rate? No. Even when you backtested, you have some losses. So when you are now doing your forward testing, your live trading, expect the losses too and accept it. There's something called the losing trade. When you can follow your trade, you can follow your trading plan perfectly, correctly, and you can still lose that trade. Right? So, for example, now let me open the charts. Let me open. I have an example on that. I have an example on that, and it's very painful. All right, I have an example, but the reason why it doesn't hold me to heart is because I have disconnected my trade from the outcome, right? So this is the trade here, BTC trade here. I gave it out to the what's it called, to the group. You can see this BTC trade here. The same analysis for these two trades. I took this one, I hit take profit, I put my TP here, I hit take profit, I enter the second trade, the same strategy, the same analysis, the same entry. You can see here, I entered from a breaker block and I also entered from a breaker block. The same entry, the same analysis, the same strategy correctly, and market take me out. You can see market rejected from there. Market took me out and sell. This particular trade here, if I did not separate, my trade from the outcome, it's going to hurt me. I'm going to feel so bad. And when I feel so bad, it's going to trigger the emotion within me. And when it triggers the emotion within me, it's going to affect my next trade. Why? Perceptions. Because the moment your emotions are being triggered, your mind will notice it. Your mind will take notes of it. Your subconscious mind will take it in because of what your emotion is being triggered. So your mind will understand what is going on. So when the next trade want to comes, what happens? Your mind begins to give you a defensive mechanism. And the defensive mechanism is what? Close the trade. When you are in profit already, a little profit, your mind will be telling you, close the trade, close the trade. Because of what? They want to try to defend you. It's just a defensive mechanism, just to tell you, just to make you feel good. Close the trade. Market is going to return and hit you out. No, that kind of thing will affect you as a forex trader. So separate the trade from the outcome, right? So the way we can separate the trade from the outcome is that a good trade can lose, a bad trade can win. Therefore, judge the quality of your decision by your process, not by the outcome. Judge the quality of your decision. Judge the quality of your trades by the process, not the outcome. And one of the ways you can do it is that whenever you take a trade, ask yourself question: did I follow my trading plan? If your answer is yes, then whatsoever happens in that trade is must not trigger any emotion within you, because you follow your trading plan, you separate the trade from the outcome. So whatever happens, it doesn't affect my mindset. So you judge the quality of your decision by your process, by your trading plan, not by the outcome. So the mindset removes a huge amount of emotional pressure from trading. So it removes an huge emotional pressure from trading. All right. So if you hear me so far, just drop one in the comment section. Our time is fast spent. Let us move very fast. So if you hear me to this level, to this that's number 4, characteristics of having objective perception. Just drop what you have learned so far in the comments. Yeah, drop what you have learned so far in the comments. So what you have learned so far in the comments, drop it in the comments. Yeah, I'm waiting for you guys. Drop what you have learned so far in the comment, then I will bring it up so that other people can learn from your notes. All right, so let's continue. I'm waiting for everyone. I'm waiting for you guys. Wait, let me just. All right, so let's go to the 5th part. So the 5th part says, this one comes from what? Accepting. You accept whatever market is doing. So you change your bias when what? When market information changes. So when market changes the information, when market changes direction, you don't stick to it. You don't be like, oh, market, this is what you should do. You don't be like, oh, market, this is what you should do. Market, don't do that. Market, don't do that. Okay, let me use an example. I have an example here. All right, for example now, on gold, at the beginning of the week, I have a bearish bias. I have a bearish bias where I was expecting market to sell from this fair value gap. You can see it here. So I have a bearish bias. I was expecting market to sell from this fair value gap. You can see the fair value gap, right? But what happens? On Monday, market sold. I was happy. I was like, yes, market is doing what I wanted. But now market took out the liquidity below this low. And the moment market breaks this high, it gives me an understanding that market bias has changed on 4 hours chart. Now we are bullish. At that particular time, it will be very bad of me to keep selling. It will be very bad of me to be like, oh, market is still bearish. Oh, market is still bearish. No, 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 no. The right perspective is that change your bias when market information changes. When market changes the bias, you have to change the bias. Be flexible enough. Be flexible. In the forex market, as a trader, you need to be flexible. So which means that whatever market is doing is what you want to do. So that is the way you can have objective perceptions of the market. Don't put anything, don't try to put an image and be like, oh, this is what market should do. No, 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 no. That is so bad. You have to accept. Whatever market is doing, you accept. You are flexible. Be flexible enough. Be flexible enough. Yeah. All right. So that is our fifth part. And we go to the last one, which is avoid forcing trade to fit your analysis. Avoid forcing trade to fit your analysis. So which means that avoid forcing trade. So you are not trying to force the market to be like, oh, forcing the trades to fit your the trades to fit your analysis. Like you look at the chart, you are not seeing anything. You are not seeing what market is doing. You are not seeing what market is doing, and you be like, oh, I'm not seeing what market is doing. I'm not seeing my entry. I'm not seeing my entry model. So avoid forcing trade. Don't try to force your trading plan on your analysis. Don't try to force trade to fit your analysis. Don't try to force market to give you your trading plan. Don't force it. When you see it, you see it. It's very clear. It's very clear. Wait for the ones you see. If you cannot see it, if you are so confused about your trading plan, or if you are too confused about your setup, don't take it. If you don't see it, you are forcing it, right? So the biggest trading mistake is expecting the market to do what you want. That's the biggest trading mistake, expecting market to do what you want. If you are expecting market to do what you want, it means that you do not accept the market have the final say, right? So don't try to, what is the market showing me? You need to ask yourself a question, what is market showing me? Like, don't you stop asking what is market showing me to start asking why is not the market doing what I expected. So your analysis is a probability, it is not a promise. So when you see your setup, it is a probability. It is not a promise. It is not that, oh, market must do that thing. You saw a buy setup, you are not being like, oh, market must do what I want to buy. No, no, market is not doing what you want to buy. Market owes you nothing. Market does not owe you anything. And you can have the perfect setup and still lose. You can have the perfect setup and still lose. You cannot execute your strategy perfectly. You can even execute your strategy perfectly and still experience a losing trade. So this is not failure, that is probability. The trading is a game of probability, and you need to accept it. You need to accept that trading is a game of probability, right? So you need to accept that trading is a game of probability. So those are the we have 1, 2, 3, 4, 5, 6. So those are the 6 characteristics of what? Of objective perceptions. Objective perception of the market. It has a 6 characteristics. So when you follow these 6 characteristics, it will show that what you have an objective perceptions of the market, right? So those are the 6 characteristics of having an objective perception of the market. All right. So and how I would love to say something like this, that um the 5 traders edge questions. So which means that there's questions you need to ask yourself. Do you have an edge? Am I willing to accept the risk? Am I thinking in probabilities? Am I following my plan? Can I accept whatever happens next? So those 5 questions, if you ask yourself before taking a trade, as a forex trader, ask yourself, it will shape your perceptions of the market. Do you have an edge? Do you have an edge? Before you take the trade, does this setup follow your trading plan? Does the setup you want to take, does it follow your trading plan? And if it follows your trading plan, congratulations. The second question is, are you willing to accept the risk? If the stop is it, can you accept the lose without an emotional reaction? Can you accept the losses and be like, oh, I accept it? Before you take the trade, the first thing, does the trade follow your trading plan? Can you accept the losses? Right? The third question is, are you thinking in probabilities, or are you expecting the specific trade to win? Are you just trying to expect market to win? Oh, let the trade to win, let the trade to win. And you started praying. No, 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 no. That's not the right mentality. You ask questions, right? So the fourth question is, are you following your trading plan? Or are you just reacting to fear, to greed, to fear of missing out? Now, the last question is, can you accept whatever happens next? So, which means that if your answer is yes, then you are approaching a trade with from a very clear and earthly psychological state, right? So, those are the questions to ask yourself. All right, so we have this final series. Traders, as a traders, our biggest battle is not always on the charts, right? Our biggest battle is not always on the charts. Sometimes the battle is happening inside our mind, and the market is going to continue doing what it has always done. Market will continue doing what it has always been doing, which is what? Move. Market will continue to move, continue to move. And that's why they call the forex market what? Or the forex industry an endless opportunity. Endless opportunity. So market will continue to move. So you cannot control it, you cannot command it, you cannot force it to validate your analysis. You cannot force them, you cannot control the market, you cannot command the market, you cannot force it to validate your analysis. But what you can control in the market, or what you can control, is your perceptions. You can control your belief, you can control your risk, you can control your decisions, you can control your executions. Those are the things you can control, but you cannot control the market. You cannot command it. You cannot force it to validate your analysis. So you start asking yourself questions like, how can I become the trader capable of consistently executing my edge? Yes, how can you become a trader that will be executing your edge perfectly, consistently, executing your edge? That is the most important thing, right? So always remember this. You do not need to know what will happen next. You do not need to know what will happen next in the market. You need to know what you will do when it happens. You do not need to know what will happen next in the forex market, in the market. What you need to know is that what you will do when it happens. And that is the power of perceptions. That is the power of probability. And that is the trader's edge. Right? Always remember, you do not need to know, you don't need to know what will happen next. You don't need to know what you will do when it, what you need to know is that what you will do when it happens. And that is the power of perceptions. That is the power of probability. And that is the trader's edge, right? All right. So that is it. All right. So thank you guys. Let's go to the analysis. Yeah, let's go to the analysis. Or do you have any questions? Any questions? If you have any questions, drop your questions. Let's go through your questions before we move to the analysis. Before we go to the weekend trade recap, do you have any questions? Do we have any questions? If you have any questions, drop your questions in the chat. Any questions? Can everybody hear me? Can everybody hear me? All right, if you have any questions, I want you to drop the questions in the comment section so we can go through it together. All right. So I think I will just move to the, what's it called now? If you have a questions, yeah, if you have a question, drop your question in the comment section. All right. All right, no questions. All right. Okay, so let me just move to the analysis part. Let's talk about this weekend trade recap. So in this weekend trade recap, all right, so thank you. Okay, let's go to the weekend trade recap. So let me remove this and let me share my screen. Okay. All right, can you see my screen? All right, can you guys see my screen? Okay, let me just remove this. All right, I'm coming. I want to try to share my screen so that we can start the analysis. All right, can everybody see my screen? All right, so this is my screen here. So I'll be going to this chart here. Okay, we want to talk about the weekend trade recap, the trade we took during the week, the gold trade I took during the week, and let's see. So we'll be looking at why did I take the trade, what are the things, what are the things that aligned, yeah, that aligned for the trade. So I'm looking for the trade so that I can talk about the trade. All right, so this particular gold trade here. So this is this particular gold trade here. So we're talking about the things that comes together. Yeah, the things that are aligned. What is my understanding of this market? What is the strategy I use? It has always been my strategy, and if you look at it very well, it's very, very understandable. But let's look. Okay, let me show you the end product of the trade so that I can start from there. So this is the end product of the trade. So you can see it here, how it hit the TP. So that is the end product of the trade here. All right, so let's go back to the trade. So this particular trade here, I'll be looking at the chart and see how I took the trade. So I will delete everything on my chart so that I will start from the beginning. So the trade, we took the trade on Monday. So we took the trade on Monday, right? So this is Monday here. You can see this is Monday on gold here. So this is Monday. All right. So the first thing I'll be looking at on this trade is that I will go to higher time frames to see what I want to see first. The first thing I'm looking at is order flows. So the first thing I'll be looking out for is order flow on the 4 hours chart. And here we have another flow here. So don't forget, if you watch my videos I've been dropping, I talks about order flow leg, how that we have this. So how that this particular level here is what is an order flow. So I expect market to come into the fair value gap for me to buy to this level. But because we have sell, I'm looking at sell now. Let me draw the sell order flow leg. So which means that I'll be having something like this. So market break the low, then having an order flow. So this is what I call order flow legs. So which means from this high, then to this particular low. So when we must have a fair value gap inside the range. Then I will expect markets to enter the range and sell to this particular level here. So I hope everybody can hear me. All right, let me just continue. So this particular level here, this is what we call this is what you call the bearish order flow leg, and this is what you call a bullish order flow leg. So now if you look at the chart on Monday, I saw this bearish order flow leg here. You can see this high, market break the structure here, this low, and we have a fair value gap. So you can see one thing about something you can first see is my perception of the market. I look at the things I have learned, the things I have known, and that's what I'm looking at. So I don't care about any other thing. So people can be like, oh, this is another block here, market trade to another block, something like I don't care. That is my perceptions of the market. That is what I believe the market should do. And that is what I believed the market should do. But because I have the objective perceptions of the market, I accept anything the market want to do. And I'm not trying to force the market to enter my fair value gap and sell, right? So I accept everything market want to do. So this low here will be my target, and that is why I always trade order flows, because I accept anything market will want to do. So I expect market to sell inside this fair value gap and take liquidity from this low. So when we go to the no, if you see it from higher time frame, it is not a big deal, like it is not something so big. But if you go to lower time frame, you will see that it is so big. So when we go to the lower time frame, let me check. So when we go to the lower time frames, 15 minutes. So I want to be a seller inside this fair value gap here, and I want to sell to this particular low for my target, right? So there's something I always look for on my what's it called, for my entry. I go to the 1 hour time frame. So on the 1 hour time frame, I want to see market taking out liquidity. I hope everybody can still hear me. All right. If you can hear me, drop one in the comment section, because I cannot see the chat now. Or drop one in the comment section. All right. So inside the fair value gap, because I have the understanding that market is going to sell inside that fair value gap to where? To my liquidity level. All right. So inside this fair value gap, I want to see market taking out liquidity on 1 hour chart. So I'm looking for candle liquidity, and I will explain that later. But the first candle liquidity I saw is this particular level here. Market took out the liquidity on the previous level. So there's a sweep of liquidity and a rejection. Market sweep the liquidity and rejected. So on this level here, I will go down to the lower time frame to look for what? Break of structure, and I will enter with the fair value gap. So this is the first trade I saw. So the second trade I saw that I gave out was this particular trade here. Now the second part of this strategy is that there is time. There is timing to it, and the time is that I have my timing segment here. Is that is either it is a Asian section or New York section. So the liquidity must comes during the Asian section or what, or the New York section. So now you can see that the liquidity is being taken out here. On the red zone here is a New York. So liquidity was being taken out in the New York, and the liquidity was being taken out in the Asian section. So those are the two sections that market took out the liquidity, and that is the section I'll be trading from. So let me go to the 15 minutes time frame. So on the 15-minute time frame here, I'll be looking for what? The break of structure. I'll be looking for the break of structure on the 15-minute time frame. So this is the first trade I saw. So market break the structure after taking out the liquidity here. Here we have a break of structure and we have what? A fair value gap here. So you can see a fair value gap here, but I'll make use of a key level here. There's a key level here I make use of. So that is the first trade I saw on that same day. Don't forget, I have what? Understanding of the higher time frame. So I know where market is going to on the higher time frame. I know where market should go on the higher time frame. So that is the first trade. So the second trade I saw during the New York Q zone is this zone here. Market took out the liquidity on 1 hour time frame, and we have a break of structure here. You can see how market break the structure. You can see the break of structure here. Let me take away the section. So you can see the break of structure here. So we have a fair value gap at this level here. But I will not make use of the fair value gap. I will rather make use of a key level. So the key level I make use of, I think, was this particular level here. Yeah, this level here. I make use of this key level, and that is where I put my entry, and I put my stop loss above here, and I target 1 to 2 level. So that is the analysis. You can see the trade here. You can see where I put my entry. You can see the first trade, how I took the first trade. You can see the second trade where I put my entry, and you can see when market hits the TP of the trade, that's 280 pips. Yeah, that is how I entered the trade. That is how I entered the trade. That is the analysis for the trade. Like, that is the exact way I took the trade. It is just the top-down analysis. There must be a top-down analysis for my higher time frame. Then for my higher time frame, this particular strategy here is a section strategy. So which means that it's either you are taking it in the Asian section or in the New York section. So I'll be talking about this strategy more on my YouTube channel. I'll make a video talking about the strategy, talking about the whole breakdown of the strategy. But this is how I took the trade. Now, if someone asks me what is the probability of the trade, because I know it is a probability trade. It is not certainty. I'm not trying to be like, oh, market should do what I want to do. This is just my perception of the market. This is just what I see, that, oh, this is the understanding I have based on what my back testing I have done, that, oh, market should do this thing. But if market does not do it, I'm okay, I'm fine. I'm not trying to force market to do what I want to do. That is the understanding, balancing. So as a trader, we need to check what is our belief, because our belief is what we create our habits of the market, right? So let me stop sharing my screen because we have a lot of things. All right. Or do you have any questions? If you have any questions, yeah, if you have any question concerning the strategy, yeah, you can just ask. At least we are live now. You can just ask about your questions. If you have any questions about the strategy, right? So this is the question and answer segment. So if you have any questions, any questions, right? So it seems we don't have any questions. So this will be the end of our meeting this evening. Yeah. So I appreciate everyone. Yeah, you can just drop where you are watching us from. If you have any questions, this is a question and answer segment. Any questions about the strategy, any questions about the trade, any question about the perceptions, you have any struggle you are going through, let's talk about the way out. All right. So drop it in the comment section. Okay, you have a question here. Apart from New York and Asian section, does the strategy work any other section? So I have not back tested it. So the other section that remains is London sections. So most times, London sections is known for mostly consolidation. Okay, most times it is known for consolidations, right? So I have not backtested London section, but the two sections I have backtested is Asian section and New York sections. So those are the two sections I have backtested. All right. So when are you dropping your first video on the strategy? Yeah, I should drop it. I think during the week. That's next week. I should drop it during the week next week. Um, yeah, yeah. Right. I should drop it during the week. So as next week, maybe Monday, Tuesday. Yeah, I should drop it. I'll drop it. Okay. Question. Also, does it works on all pairs apart from gold? Yeah, it works on silver. It works perfectly on silver. Let me show you silver. Let me show you silver. Let me try to share my screen on silver. It works on silver. Yeah, yeah, I forgot. It works on silver. Okay, let me show my screen. Right now, the same having on. So this is the same trade here on that same day on Thursday. No, this on Thursday. I have a trade on Thursday on silver. The same analysis. 1 hour. Market took a liquidity on higher time frame. Liquidity being taken on higher time frame. On So you can see liquidity here is being taken on this high. Liquidity is being taken on higher time frame at this particular level here, right? So we have liquidity being taken on this particular level on higher time frame, right? So when we have liquidity being taken on higher time frame, we go to 1 hour chart. So on 1 hour chart, I just want to wait for the session. So I will put on my section indicator. So my section indicator, it will indicate to me that, oh, this is the Asian section. So during the Asian section, I want to see what a sweep of liquidity on 1 hour chart. So now we have a sweep of liquidity on 1 hour chart at this particular level. You can see it's a sweep of liquidity on this time frame. So I will go down to a 15-minute time frame to look for my break of structure. So you can see that we have a break of structure here, a break of structure at this level here. So after a break of structure, I will look for, on that break of structure, there must be a fair value gap. Then I will now look for what? I will look for my key level. So I will enter for my key level and I'll put my TP either on the swing or on the external swing. So, but I love to trade internal to internals. So that is why. So that is another trade on silver. So that is the two pairs I have backtested so far, gold and silver. Yes. So I don't know about other pairs, but you can backtest it and see if it works. Don't forget, for you to have an edge, you must what? Have a proven data. You must backtest it at least 100 trades to make sure that to know if it really works or not. All right. So the second question we're having here, it says your weekly class live, your weekly class or live stream helps and encourage me a lot. Thank you for the work. All right, thank you so much. Thank you for the work. Thank you for the feedback. Thank you for the encouragement. Thank you so much. Yeah, thank you. Okay, other questions there say, how do you find your key level? Yeah, finding a key level in the market uh, is number one. I won't lie, is you study, you backtest, and you experience it. So when you study, when I teach people, when I tell people, oh, key level, okay, let me tell you the key level I use. The key level I use for this particular trade here. So you can see my chart here. The key level I use for this part, let me delete this particular level. So let me delete, I want to delete mostly so I can see what I use. So the key level I use for this particular trade here, it is called open and close. Open and close. Open and close key level means that when markets, when this candle here closes, this is a bearish candle. So which means that it closes at the low. If you look at the close level, look at the close level at the top. The close level of this candle is 6243. 6243. Now the open level of this candle is what? Is 6243. So which means that 6243 level is a key level. Both open and close are the same level. If you can be like, oh, it is normal for every candle. No, it is not normal for every candle. If I check this candle here, the close of this bullish candle is what? Is 6239. If you look at the open of this second candle, the open of this second candle is what? 6240. So there's a difference. So whenever you have a level that is open and close at the same level, it is a key level. That is one of the key levels. There are many more key levels, and we talked about it on my videos. I will make sure I am diligent to talking about key levels and this strategy here, right? So I hope I have answered your question. I hope I'm able to answer your questions. So the key level to how to identify key levels is learning, which is the skill. You have to what? Back test. You have to back test it. And the third one is that you have to experience it. Because sometimes key levels, you have to mend it. You have to make sure that sometimes you just have to focus your eyes on seeing it. So you have to study it, you have to back test it, and you have to experience it on a live chase. Right? So if you have any other, I hope I am able to answer your questions. And if you have any other questions, all right, thank you so much, Bro Kayode. Thank you. All right, so that on the key levels and this particular trade I took here. All right. So do you have any other questions here? Okay, so if we don't have any other questions, I want everyone to just drop. If you are listening to me now, you can hear me. I just want to appreciate everyone that joined the live. So just drop something on the comment section. Or just drop something in the comment section or your name so that I can appreciate you. Yeah. So drop something in the comment section. I'm looking at the comment section. All right. Okay. All right. Thank you so much, everyone. I really appreciate everyone for joining the talk show. So for the next week, we'll be having another talk show, and the topic will be out. So thank you guys for joining. Thank you, thank you, thank you. All right. I'm looking for something to. Okay. So okay. All right. All right, bro Oladotun, thank you very much, boss, from Ogun State, Nigeria. All right, thank you so much. Thank you, thank you, thank you. All right, in conclusion of everything, because I love to do conclusion, always remember, change your perception, change your decisions, change your executions, and your trading will change. So this is the trader's edge. So your perceptions, if you have an objective perception, it will give you a better decisions and a better executions. All right, I have another comment. All right, Bokayode from Oyo State, thank you so much. And everybody else, thank you so much. I really appreciate everyone. Bye. See you in the next talk show. See you in the next talk show. All right. So I think that is all. Thank you.